Right, we're going to start in a minute. Just setting up the sound. Let's have a look here. Not sure why the sound is not coming out. Let's see here. Sound. Sound. Right, we're going to start now. We're going to start now, right? So let's see here. So go live. Okay. Right. So let's see here. Let's see. Let's have a look. Let me. Not sure why this volume is not coming out. Right. So let's see here. Welcome. Today is going to be interesting. Today we're going to talk about Schedule A, itemized deductions, right? So hi Crystal, hi D, right? Hi Laurie, right? So let's see here. We're going to start in 2 minutes, right? So let's see. Just let's give one of we're going to start in 1 or 2 minutes. So let's see here. Okay. Let's see here. Right. So it's going to be. I always like to start. So I'm going to do something new today. I'm going to start with we're going to talk about some interesting things about life. So I think it just dawned on me. So as I was just thinking today, I just said to myself, right? You see, at times we work so hard. Again, I'm not talking about me, right? We work so hard. We try to compete with others, right? You see, in life, you have to stay in your lane, right? It's your journey, it's your life. It doesn't matter what people are doing. That's not relevant, right? So always stay in your lane. The most important thing is to stick to your goals. You need to have you need to have clear goals, right? So once you have clear goals, just stick to your goals and you should be fine, right? Now, you see, one of the things I always say is that paying taxes is a choice, right? Most people have a knowledge problem. And that's why most people end up paying a lot in taxes, right? Now, it's a choice. To pay taxes is a choice. Because you see, wealthy people have understood that, they've understood the power of knowledge, and that's why they use knowledge to their advantage, right? Again, I don't expect you guys to be accountants or tax practitioners, right? Or tax strategists. At least, you have to help yourself. There are basic things that everybody needs to know about, and then there are other things that you need to get an expert to do them for you, right? So today we're going to talk about those basic things that everybody needs to know when it comes to taxes. Knowledge is power. So we're going to start real quick here. So today we're going to talk about Schedule A, itemized deductions. Now, so again, why is it important? Now, it's absolutely important because it's an integral part of your tax return, right? Now, last week we spoke about Form 1040, right? Form 1040 is your tax return. Now, if you look at there's a section, line 12 of your tax return actually states that you can use your standard deduction or you can use an itemized deduction, right? So we spoke about that last week. Now, if you are single for 2022, the standard deduction was $12,950, right? And again, we saw that, that's one of the, if anybody making more than that has to file a tax return, right? Hi, Malisha, welcome. right? So today we're talking about Schedule A, which is itemized deductions. Now, so if you are single, your standard deduction is $12,950. Now, if you're married, then that amount is doubled, so it's $25,900 that you can claim as standard deduction, right? If you're claiming head of household, it's $19,400. Now, from our conversation last week, head of household is a very good status that many people like to claim head of household, and basically to get a higher standard deduction. Now, so I'm not going to talk about head of household today because we covered that last week. If you haven't watched it, you can watch our video last week, the recording last week. We covered extensively from 1040. Those things that everybody needs to know, right? So now we're going to talk about the standard deduction versus the itemized deductions, right? Now, one thing is clear, and I need to make it very clear. If you are single, right, you are less likely going to itemize, right? Especially, hi Mika. So if you're single, right, you are less likely going to itemize. Why? Because the standard deduction of $12,950 is not easy to hit that goal, right? Especially if you're single. Now, however, from experience, if you are single and you are a homeowner, you are more likely going to itemize. I repeat, if you are single and you are a homeowner, you are more likely going to itemize, right? Now, if you are claiming head of household, you are not easily going to itemize, right? If you are single, you're a homeowner, you're more likely going to itemize. Now, so we're going to talk about itemized deductions, right? So itemized deduction is basically what we call a Schedule A. So why should people even itemize, right? Now, this is one of the areas where people commit a lot of fraud with this. So let me share a story with you guys, right? So I was doing someone's tax return, and I realized that the person who did the tax return for this person, they claim ridiculous things as charitable donations, medical expenses, mortgage interest, property taxes. It was crazy. Now, the itemized deduction on that tax return was probably over $70,000. I've never seen that in my life, right? So it's crazy, because most people it's not easy to itemize. Now, if you have $1 million house with high expenses, yes, you're more likely going to itemize. Now, generally, if you are married, right? If you are married, you are less likely going to itemize. However, if you have an expensive house, a house costing over, $700,000, and then plus charitable donations, then you are more likely going to itemize. So the reason why I'm stressing and emphasizing on these points is because with these little tips, you can easily determine whether you should be itemizing or not, right? But we're going to go into more detail right now. Now, if you look at Schedule A, which is itemized deduction, it has basically like 6 sections, right? So you have a section for medical and dental expenses, right? Then you have a section for taxes that you've paid, and then you have another section for interest that you have paid, right? Again, I'm streaming on Instagram and streaming on Facebook. So if you see me looking here, it's because I need to look at both audiences, right? So you have a section for interest that you've paid, and then you have a section for gifts to charity, and then you have a section for casualty and theft losses, and then you have another section for other itemized deductions, right? Hi guys, those coming in now, welcome, right? So so we're going to start with medical and dental expenses. I think I'm going to have to it's a long list of things that you can basically claim and things that you cannot claim, but I think I'll have to create short videos to talk about the things. I think that'll be the best idea, so that people can can understand. Now, when it comes to medical and dental expenses, the first thing to understand is that you can only deduct you can deduct only the part of your medical and dental expenses that exceeds 7.5% of the amount of your adjusted gross income, right? So let's do the math. If your adjusted gross income is $100,000 as an example, right? So you can only claim the amount that is above $7,500 on this return, right? On your Schedule D, on your Schedule A, right? So that's the first thing to understand. Now, the other thing is that if you have like a deceased taxpayer, right, they can actually claim certain medical expenses that were paid out of the deceased estate, right? So those ones can be claimed as well, right? Now, so we're going to go through the expenses. It's a long list of expenses. I'll just probably have to do reels or something like that. That would be more interesting, right? So again, we're going to look at the things that you can claim as medical and dental expenses and the things that you cannot claim as medical and dental expenses, right? So things like insurance premiums for medical and dental care, you can claim those ones, right? And then things like prescription medicines like insulin, you can claim those ones, right? Now, going to the dentist, to the eye doctors, to the chiropractors, to the acupuncturist, you can claim all those things. Occupational therapy, so all those kind of physical therapies and so on, psychiatrists, you can claim all those expenses. Going to, I know a lot of nurses have been going through health challenges, especially with COVID and things like that. Yes, so going to a psychiatrist, yes, you can claim that on your Schedule A, right? Now, you can also claim things like medical examinations, x-rays, laboratory services, insulin treatments, your doctor ordered, right? So including things like body tests, like MRI scans, full body pregnancy tests, blood sugar test kits, all those things you can claim them. How exciting it is, right? Right. Nursing help, you can also claim them, right? If you paid someone to do both nursing and home and housework, then you can deduct those. You can only deduct the cost of the nursing help, right? Now you also have things like hospital care, qualified long-term care services. You have also the supplemental part of medical. It says what? Yes, Medicare insurance, right? Again, if you are a smoker and you are enrolled on a program to cease smoking, yes, that one you can claim it as well as a tax write-off, right, on your Schedule A. Now, so if you were going through medical treatment, at the Center for Drug and Alcohol Addiction, yes, you can claim that, including weight loss program, right? So now I have to be clear here. Weight loss program as a treatment for a specific disease, including obesity, diagnosed by a doctor, which means that what? If a doctor diagnoses that you are obese, right? If they diagnose that you are obese, then you can claim that, as an expense on your Schedule D, on your Schedule A. Now, and then you also have things like medical aids such as eyeglasses, contact lenses, hearing aids, braces. People didn't know that they could claim braces. Yes, you can claim braces. How exciting is that? So braces, crutches, wheelchairs, guide dogs. Think about it. You buy a guide dog, you can claim it, right? So things like that. Surgery to improve maybe defective vision, including laser eye surgery. Wow, think about it. Laser eye surgery, you can claim that. Right? Again, there are lots of things, right? The cost of is crazy. Cost of breast pumps and supplies, things like that is crazy. So there are so many things that you can claim on your Schedule A, right? However, there are things that you cannot include on your Schedule A, right? So things like if you are dieting, right? The cost of diet food, no, you cannot claim that, right? Cosmetic surgery, right? Now, again, cosmetic surgery, you have to be careful here, right? It says unless it is necessary to improve a deformity related to a congenital abnormality, right? Or an injury from an accident or trauma, or a disfiguring a disease. Now, again, cosmetic procedures, we have to be careful here, because if you're a business owner, right, and that expense is necessary for your business, then you should be able to claim that, right? But it has to be necessary, right? Now, things like you can claim cosmetics, and then things like you cannot claim life insurance here, income protection policies, no. Medicaid, tax on wages, you can't claim them, and all this kind of stuff. Illegal operations or drugs, no, you can't. So these are not the medical expenses that you can claim. Non-prescription medicines, right, other than insulin. So if you're buying non-prescription medicines, you cannot claim them, unfortunately, right? Now, things like funeral, burial and cremation costs, yes, you cannot claim them as well, right? Now, so we've looked at let's see here. So we looked at medical expenses, medical and dental expenses on your Schedule A. Now we are going to go to the next. Remember, itemized deductions, there are six sections, right? Medical and dental expenses. We are now going to go to taxes that you pay. So the taxes really will be like state and local taxes, right? State and local taxes, again, you have to be very careful there, right? Because there are restrictions with regards to the state, the amount of state and local taxes that you can claim. Now, the maximum is $10,000, right? So if all your taxes are $150,000, you can only get $10,000. Now, I need to emphasize here, this is one of the areas where if you are, if you are married and you're filing separately, you're actually losing out here, right? Because if you are married and you're filing separately, right, you can only claim $5,000 of taxes. Now, that's an issue with being married and filing separately, right? Generally, being married and filing separately does not work in your favor, right? Now, so again, when it comes to like the taxes paid, there are a couple of things that, so I'm going to tell you the kind of taxes that you cannot deduct, right? So things like you cannot deduct federal income taxes and most excise taxes. No, you can't, right? Social Security, Medicare, and federal unemployment, you cannot claim all those taxes. Custom duties, you cannot claim them, right? Federal estate and gift taxes, no, you cannot claim those on your Schedule A, right? Now, again, let's look at the there's some complexities with, you see, when you're claiming state and local taxes, you can either choose to claim a general sales taxes, right? A general sales taxes, and that's kind of the so it's actually, so you can choose to claim like general sales and local taxes, or you can choose to kind of itemize, right? So which means that what you go to on your for example, you have to now itemize like state and local taxes that were withheld from your salary, right? So you working in California, you working in different states, you can now choose to itemize all those taxes, right? So there are a lot of complexities around that area, but generally most people tend to use most people just elect to use like to elect most people elect to deduct general sales taxes, right? But again, it's on a case-by-case basis, right? Now, so the next section of form, let's look at the Schedule A of Form 1040. Now you have interest that you've paid, right? Now, generally here you would have things like home mortgage interest and points, right? So you buy your home, you claim the mortgage and all those things. Now, in taxes that you pay, you also have real estate taxes. Now, you are going to get Form 1098 from the mortgage lender, right? If you look at Form 1098 from your mortgage lender, it states the amount of interest from interest on the mortgage, and it also tells you the amount of state tax, the amount of real estate taxes, right? So that's what goes on your itemized deductions, right? So now, so we've looked at the taxes you've paid. We've looked at medical and dental expenses. We've looked at interest that you've paid, home mortgage interest and things like that, right? Now, so let's go to gifts to charity. Now, I need to kind of emphasize, you see, most people say, oh, I've given money, I've given X amount to my church as tithes and offerings, and it's going to be a tax write-off. No, right? If you are a corporation, right, as a corporation, you are a separate legal entity. So a corporation can claim donations straight away on the corporation's tax return, right? That's a straight write-off. No matter how much it is, you can pay directly through the corporation and get a tax write-off. Now, when you are an individual, it is slightly different. The donations to charity, they would go on your Schedule A, the itemized deductions. Now, from experience, if you are, like I said, if you are single, right, and you are not a homeowner, for you to really claim donations, right, for it to work for you, welcome Vince, right? Now, if for you to claim donations on your tax return, you need to have given probably over $9,000. I would say so, over $9,000. Let's say $10,000, because if you give $10,000 as a single person, right, without being a homeowner, then you have all the other things that can help you out. Like there are other itemized deductions, and then you can also claim things like, general sales taxes. So those things can help you. But trust me, if you are single and you're donating less than $10,000, it's not worth it. You're not going to get any, and you're not going to use. You are not going to be able to itemize, right? Now, so let's look at the so the gifts, you can either give in cash, or you can give cash or check, or you can give other than cash or check. So generally, if you are giving more than $250 in cash or check, you have to really have proof and a form of evidence. So you need to ask the charity to give you a statement of your donations or your givings. That is, you have to cover yourself because it's your responsibility to do that, right? So those are donations. Now, for donations other than cash and check, so that would include things like you going to Shane, welcome Sasha. Now, if you are giving to Goodwill store, for example, something like that, then you need to, as long as it is over $500, right? If you made any gifts of if you made any gifts of $250, let's say over $500, you need to ask for evidence. You need to ask for a form of receipt that breaks down the items that you've given to the Goodwill shop or the Salvation Army and all those kind of charities, and then they need to give you that, right? Welcome, Tenny. So ask for those for that proof, because at the end of the day, it is your responsibility to protect yourself, right? Now, so those are the things that you need to do to protect yourself. Now, there are other things that you can kind of claim here as well. So charitable miles, right? So think about it. You driving for charitable activities, you can also add that on your Schedule A and claim it as as part of your itemized deductions, and that will give you a boost, right? Trust me, itemized deductions is one of the areas that you have to be you have to pay attention to it, because it can make a difference on your tax owed, on your tax liability, or your tax refund. So it is absolutely critical, right? Now, so that's and then the next section on the Schedule A, which is itemized deductions. Remember, today we're talking about itemized deductions. Last week we spoke about Form 1040. Itemized deduction is absolutely important. Now, for those who are just joining, earlier on I explained the difference between itemized deductions and standard deductions, right? So it's important to understand the difference. Now, like I said, if you have a mortgage, right, and you're single, you are more likely going to have to itemize. But if you're married and you have a mortgage, you are less likely going to itemize, except if you have except if you own a property, that's probably over $700,000, right? And then again, if you gave a lot, right, over 5,000, 10,000 to charity, then you are more likely going to itemize, right? Now, the next section of Schedule A, which is itemized deductions, is again is just there. It says casualty and theft losses. Again, this is from federally declared disasters, right? So when there's a federally declared disaster, you have all this FEMA, then you can include that on your Schedule A and take advantage of itemized deductions, right? Now, the last part of the itemized deductions, right, there are other things that you can itemize. Now, for example, the tax software that I'm using, it allows you, Kiasha, welcome, right? For those joining now, we are looking at the differences between using itemized deductions and standard deductions, right? And again, we covered why it is it's a critical part of your tax return, and you really need to understand this, right? Now, so we looked at a bunch of things, things that people can claim, right? Now, we are going to look at amounts that you can't deduct on your. Let's go back to charitable donations. There are a couple of the charitable contributions that you cannot claim. Things like political contributions, you cannot claim those, right? Dues, fees, and things like that to country clubs, you cannot claim those. Value of your time or services, you cannot claim those, right? Again, if you value of blood given to a blood bank, you cannot claim those, right? Now, it says our gifts to organizations engaged in certain political parties, things like that, you cannot claim those. But again, I'm going to go to the last part of the itemized deductions. Again, itemized deductions is Schedule A, right? So the last part will be other things that you can itemize. Now, there are other things that you can itemize. Now, are you guys ready? Now, welcome, right? Now, so things like gambling losses. If you gamble, right, you can literally claim the loss as part of your itemized deductions. People don't know that. However, there is a catch there. You cannot claim a loss more than your winnings, right? So let's say that you won $1,000 and you lost $5,000, right? You cannot claim the loss of $5,000. The maximum you can claim is equivalent to your winnings, and that's what the loss is, right? So yes, but you can claim gambling losses, going to bingos and all those kind of stuff, those kind of places, playing a lottery, raffle tickets and all those kind of things. But like I said, you cannot claim a loss more than what you actually won on that day, right? Now, we have so the other things that you can claim here will be things like casualty and theft losses on income producing property, right? Now, you can also add on your Schedule A federal estate taxes on income, in respect of a decedent, right? Somebody died and they had to pay federal estate taxes on income. Yes, then you can put that as part of the itemized deductions, right? Now, again, there are certain uncovered investments in a pension and things like that. So the software that I use, for example, has a section where you can actually claim, especially like nurses, doctors, people in the health sector. If you have unreimbursed, like stethoscope, paying for training, continuing education, as long as they are not reimbursed, the software allows me to put that as part of your Schedule A, right? So you have to be careful. If you are paying for training and you're not reimbursed, if you are paying for work tools, right, a stethoscope, anything that you need as a healthcare professional, then you can claim those on your tax return under your Schedule A, right? Again, my software allows me to do that, right? So that's what, this is kind of a summary of what we need to know about, Schedule A itemized deductions. Yes, and also The maximum amount of state and local taxes that you can claim on your Schedule A is, like I mentioned earlier, is limited to $10,000, right? But if you have married and filing separately, they limit it to $5,000, right? So that's why generally it is better to file, as being married, right? And there's, for those who are joining now, this is kind of a recap. If you are claiming head of household, you are less likely going to itemize. You are less likely going to itemize because as head of household, think about it. When you are head of household, you get 19,400 as standard deduction, right? Think about it. Except if you have an expensive house with high real estate taxes, interest on your mortgage, and then you donated a lot to charity, then you are more likely going to itemize, right? So this is what I thought. It's everybody needs to know about these things, so that you don't just, when you're going to whoever does your taxes, you're not going like a blind person, right? You're going like somebody who has at least that basic foundation, right? So again, this is time for questions. If anybody has any question, my goal now is to I understand it's very complicated. Most people don't like taxes, but unfortunately taxes deplete wealth, right? So if you don't like taxes, trust me, you're not doing yourself any favors, right? So every week I'm going to talk about different things, but what I think is the best thing that I'm going to do like reels for each of these points, right? So that you guys can easily, I know people like those things, so that you guys can easily follow the reels and understand. So we're going to break down each of them. We're going to talk about the medical expenses, break it down for everybody so that you can easily understand. So that's the approach I'm going to use, right? Now, again, has anybody got a question? Now, one of the things I always request from my audience is that if there is any specific topic that you want me to talk about, please just let me know. Then at least I can do that for you, right? The 10th queen, welcome, right? So again, you're coming towards the end. So we're basically talking about the difference between a standard deduction and itemized deductions and why they are absolutely important. So just because you're coming a bit late to the game, you probably have to watch a recording, right? Now, who has any question, right? Or who has a specific area of taxes that they want me to talk about, right? We're going to live sessions every weekend to talk about different aspects of taxes, because everybody needs to have that basic understanding so that you can do yourself a favor and reduce your tax liability, right? Any question? Right? I can see Kiasha there. Any question? Tenny, any question? Anybody, any question here? Right? Any question? Right? Mika, any question? Malisha, any question? Right? Crystal, any question? Right? Any question here? Right? If you guys don't have any question, now, is there a specific aspect of tax that you want us to cover? We're going to talk about everything. Don't worry. We're going to talk about all the schedules A, including real estate. We're going to talk about a Schedule C for businesses. We're going to cover all of those. We're going to talk about Schedule E for rentals and all those things. So I got you covered, right? You don't have to worry. You need to have this basic understanding, right? Invite your friends so that everybody can benefit from these sessions. Right? Like the videos and share so that more people can benefit, right? So I'm going to stop here for I don't think anybody has a question, right? So what I'm going to do is I'm going to wish you guys the best for the week, right? And just take care of yourself, right? Have fun. And now, who enjoyed today's session? Tell me, who enjoyed today's session, right? Who enjoyed today's session? Tell me here. Right? Yeah, I can see. Yeah, Kiasha. Yeah, that's awesome. So I'm going to stop here. Let me stop